The larger term timeframes are starting to show some true colors, and they are looking pretty bright for GME. A bi-weekly formation has been spotted, and it has some massive targets for us to speculate on and compare. Let's pop open the hood for a true edge over the coming sessions. Welcome back to the channel on this Taco Tuesday. This is ARCa, and let's dive into GameStop. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button. Make sure to subscribe to the channel and do everything necessary to get this thing to thrive and survive. Let's go ahead and dive in to GME here on the bi-weekly time frame. And I want to show you this formation right here. This is actually called a falling wedge, right? So this formation and any other formation in the financial markets, right? Whether it be crypto, whether it be risk-on assets like here, traditional equities, bonds, futures, forex, whatever you want to trade, currencies, these formations tend to have some unique price action, and they tend to behave in similar ways. Okay, so in this example here, this is pretty much a textbook, I would say pretty much a textbook example of this falling wedge formation. It is a triangle family formation, and it is a bullish one. Now, how it's a bullish one, it's actually the falling properties here, converging price alongside the dipping of volume here, right? So please notice here how volume is falling, right? That is a key component of the falling wedge. Now, it does have three targets for us to evaluate. The first target of which is the breakout target. So we take a trend line simply from that breakout candle to the bottom side of the formation, and we apply it to that breakout candle, and that takes us to a target of about $18.96, just about $19, right? The second target would be the center of the triangle. So just kind of envision here the apex of the triangle right down here, and we can observe this as being the potential half of that triangle, right? So let's go ahead and apply that right into that same zone, and we can see here that the next target would be $20.56. The last target that we can observe here would be from the very very butt, right in the back of the formation. That would be right about here, and we apply it to that same breakout candle. In this case, we are taken to a target that is consistent of about 27. Come on, man. Let's do this here. I believe it's 27.78, right? 26.78. There we go. So let's go ahead and now I have no idea what that sound was, right? But let's go ahead and get this out of the way and this out of the way. Let's just make them blue so that we can observe here. We're gonna go ahead and pair these targets with a tag, right? So this one is going to be your 18.96 target. Let's go ahead and kind of pair it just like this here. This is going to be your $20.56 target. Let's make sure to have a tag on it just like that. And the other target, 26.78, right? So let's go ahead and put it in just like this so that we're all on the same page. Okay, so this is usually how a breakout formation of this type of price action, the cluster of candles here, this is usually how it's measured. Now, it's not to say that it can't go to the downside. In fact, the formation favors the bulls, but of course it can be traded towards the downside even still. All right, now I will actually talk to you about a potential secondary formation on this. Okay, now that formation is actually identified as a wolf. Okay, so if it is a wolf, then there is a potential that this is already kind of performing like it, okay? And the reason why I say this is because price action failed here. Now, if it is a wolf, then we simply take the number 1 wave to the number 4 wave, and I will go ahead and explain that how. Okay, so this is going to be your number 1, right? This is going to be your number 2. This is your number 3 bottom. And this is your number 4. Okay. So from the first wave to the 4th wave is how we apply a trend line. That the wolf pattern usually happens when you have failure of the regression. Okay. So just in case that's the practice here, then we can observe some targets like this here, right? So it's telling us that this formation it already has confluence to the 2056 target, and it does have some confluence to that potential top side of the 2678, right? there's no telling how much this can be extended right here, right? But to proportion and discretion, right? I think this is pretty much a safe place. So we do have, we actually have confluent targets all over this, right? So we do have that 2056 right about here, and we definitely have that 2678 right about there within a good amount of within a good discretion here on length of that trend line. Okay, so the wolf pattern is actually there and it's confluent to two targets here. What about geometrics? How can we make sure that they have some confluence here? So let's go ahead and just kind of observe that potential here. I just want to see what the top end of that candle is and also what the top end of this candle is. So that top end is right about 1745. And let's see, let's just make sure that 1745 is on the OHLC here, right? That's going to be your high, 1745, right? So let's go ahead and apply some fibs from that 1745 target down to the very bottom side of the formation here and take a look at what we have, right? At least in the geometric side of things. We'll take a look at this. We have the 1896 and the 2056 very much very much confluent to the 1.272 Fibonacci ratio. And you guys know, for those of you who follow me often, you guys know how much of a fan I am of the 272, the 618, the golden pocket, right? And all of them, they're great, but just some of them tend to repeat a little more than normal. And take a look at this, 2476 to 2678 marks off the confluence between the 1.618 golden mean and the upper bound of the back end of the formation, right up here. So now we have two zones for us to observe. We can go ahead and tag this up as well, just so that everyone kind of knows, right? So this, we can put it just like this here, right? We'll go ahead and put this one. Yeah, we already have both of those, so we're good. Okay, so these are the targets that we're observing so far. Now, that we have 2678, so pretty much 19 to 27 bucks, right? So we do have a back test on this that is consistent of the daily time frame, which I already have, please watch yesterday's video to understand the plots of those targets, right? In fact, all of these targets have already been met from the statistical side of the analysis. We've actually performed a back test here that is, please take a look at this, right? This is a manual back test of volatility and linear, which is this, one of my algorithms here that I've actually coded. This is the volatility heat map versus stochastic momentum on the daily time frame throughout its entire trading history on that daily, right? So anytime that volatility enters the 90 percentile, I have taken note of every iteration where price action has made an upside from that signal. Okay, so, and this is how I have this data set aside for us, right? Now, I have also taken a back test of your 5-day time frame, right? So you can notice right up here, where is it? Here it is, right? So this is your daily, and this is your 5-day back test. And the 5-day back test also has its own iterations, right? So the way you can tell is just like this, right? We'll go ahead and block this one, and this is your daily, right? So I have ran two back tests here to run confluent targets. Now, using both of the 5-day targets and the daily targets, that actually gives us a set of targets for us to observe, okay? And the targets that we're observing here are these up here. So let's take a look at some of those. We have, let's see, 1918 of the 5-day volatility versus momentum confluent to the daily of 1923. So we have a range now geometrically to the 1.618. That's 1931 to 2070. And the upper bound of the second standard deviation from the 5-day, which would be 109% up, is actually confluent to the 99.3% upper bound of the third standard deviation of the 1-day. So the 1-day upper bound of the third, and this is the 5-day upper bound of the second. So we have confluent targets there, 2370 to 2211. Okay, and of course the 5-day time frame gave us one lone target over here that's very much confluent to the 2.272 at around that 2778. Okay, so this is what I want to compare. So how about that? We have targets here from about 2778 down to $19. These are using statistics. How about the formation? Well, $19 to $27. Whoa, my goodness. What just happened there? Right? So so we used here what I did here, team, is that I used formation theory, I used discretion, and I used a pattern analysis, formation analysis. I used it in comparison, or I used it alongside as a validator of your statistical analysis, with both of them using geometrics to validate them. Okay, so what I'm telling you here is that this is something I teach. Please get in touch with me at ArcMastersCourse at gmail.com, and I will I'm actually making my beginners traders program. I'm condensing that from an 18 to 19 week down to a 4 to 5 week crash course so that we can segue into the strategies mentorship, which is this and this, right? So get in touch with me at ArcMastersCourse at gmail.com, and I'll make sure to get you all that pertinent information. We'll get you signed up. Do not miss out, because we're getting close to starting the lectures. Okay, so get in touch with me. So team, yeah, I think you know what, this is pretty good for us to observe for now. I just wanted to give you an overall. I wanted to give you an overall analysis on this, right? So please remember that we still have several things to kind of look out for here. Right, but we were talking about today coming back down to the areas of around $14, $15 to $16. I'm sorry. You know what? Where is the? I have it right over here. Let's see. Yeah, here it is. Yeah, we were talking about the potentials of coming back down today to this focus zone again, 1505 to 1475. And as you can see here in price action from today, we absolutely did. We were able to catch another opportunity to get long and trade this thing to the upside again, right? So, yeah, let's just go ahead and observe. This 12-hour formation is giving us a little bit of weakness, but I will say that it's an inside bar within all this green here, right? So I don't know how to take that, right? But if we do have some bottom side support, sure. We have to give it another whirl, right? Again, your support range is going to be 1516 to 1436 with a focus right down here into this area, 1505 to 1475. And we may actually look at this. The price action came right down to the 1.618 at 1490. This is where your EMA 9 is located on the 12-hour. Okay, so that, again, team, we may experience another bounce to the upside. This is getting a little, repetitive here, but I will say that it is building some very scary wicks to the upside. Usually long wicks to the upside lead to downside, but look at the long wicks towards the downside too. There's a lot of indecision here, right? But overall, it does look kind of like a bull flag too, right? So let's just go ahead and observe price action here day in and day out so that we can catch an edge over GME. Please remember, we are trading and evaluating this live. So remember to join the ARCa Bulls trading team. There will be a link in the description below, and that link is also located at around 52 seconds at the beginning of this video. Join the ARCa Bulls trading team and trade alongside some very talented traders. All right, team, you know where to get in touch with me. Get in touch with me so we can get you in that course and get you trading the right way on the financial markets. All right, team, thank you so much for coming on by. Really appreciate you, and we'll speak very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your day and or night. And I will catch you at the bell mañana. Adios, team.